finance right now. Catching up on what was actually said by the Federal Reserve today, who, unsurprisingly, did not change rates. I wouldn't have taken a genius to see that. Now they're flexible about unwinding their balance sheet, which, once again, not a big surprise. And this is why when everybody's talking about, oh, well, the Fed has nothing to the Fed was the reason that all this happened from the get-go. They started unwinding their balance sheet. Janet Yellen says it's like watching paint dry. Yeah, it's like watching paint dry in front of a furnace. Janet Yellen. I mean, just unbelievable. And these are the people that control our money supply. Just remember that. So on that note, how was the reaction today? I mean, exactly how you would expect. Bonds did rally, 2 above a 1 on the bonds, right out of the gate. On the most recent candle, they were up to 146. Soaring. I did get out of my TLT position today because bond futures look like they're getting ready to run here. But TLT was starting to get a little sideways, and I really am not big on holding option positions in sideways because you lose money. And as you get closer to that 30-day window, theta just is not your friend, and you will get wrecked. That's just the bottom line. Looks like the 10-year popped a little bit harder. Not surprising. Yeah, looks like the longer end of the curve, the 30-year was actually higher today, which is a little bit strange. The 10-year was actually down about 2 points. But the real story here, the stock market. So we're beginning to range just a little bit. And after the Fed's announcement today, the stock futures did rally well over 1% at one point today. Your exact number, 1.36%, about 36 points, which is, that's a pretty big move. Not really anything to be surprised about. So the new target is going to be the 200-day moving average, at which point I am a little bit more, I'm not touching, once again, I'm not touching indexes right now. The VIX position got closed today as well as the bond position, and I've actually took off silver today too because it went exactly where I wanted. We'll get there later. So we are looking at the 200-day moving average here. We'll reevaluate there for indexes. Until then, I think that's going to be, the beautiful place, because in the 50 we did fail 2 times after we broke through, but we are back above the 50-day. Coming up to the 200 where we essentially failed twice as well because it was pretty tight with the 50. So we're going to watch and see what happens at the 200. We are only on a 4, so we got plenty of time here. Weekly time frame, which I haven't gone into any yeah, right at the 20. And on the weekly time frame, we are only on a 3. So going up to make new highs, we got all the time in the world. And that's exactly why I'm adjusting. I would not buy this market though without a pullback whatsoever. There's no way. After this rally, there's just no way. And on the bearish side, I'm going to move this up. We're going to get about 50% of the range and watch that level as well. The range before we got decimated. Because remember, it's pretty easy to forget, we're still in crash territory. We're still looking more bearish. 27.17 is right the midpoint here in the consolidation area. It's a level to be watching. I'm going to be very skeptical coming in here as a buyer due to the fact that as a whole this still does look bearish. So we're going to be treading very lightly here. Probably doing more credit spreads than anything else. Yeah, crude reacted pretty well today too. Breaking out of its range, 2 above 1 in the futures. Yeah, the dollar here. That's another story of the day, getting decimated. This is really the bearish trend. Excuse me. I'm sorry, I'm not very lively today. I'm a little under the weather. As we speak with the dollar, this does look pretty bearish, and with the Fed not raising rates, the dollar tends to follow what the Fed does. Naturally, the ones that control it, as well as the euro being inverse, which also is rallying. The question now is, do we start trending more to the upside here in the euro? That's the question, because I do believe that the dollar is going to continue to be weak, especially after the Fed, but the question is, and this is really the more important thing to be aware of here. Okay. Perfect. So, the thing to be aware of is the European economy is just a hair weaker than the U.S. economy. So we're going to really be keeping an eye on this here. And no, this is not a wedge. I would not call it a wedge. It's just a reference point. Gold really got a nice jump today from the Fed. On track to hopefully come up and retest 1369, which has been resistance for quite some time. Going all the way back here to 2014. It's a very major level there of gold, but we do have a excuse me. Wow. 2618 extension up here, 1340. Wow. This is not fun. While we're on the metals front, silver came smack up to the setup trend right above $16. I sold my SLV call options. Exactly where I wanted it to go. Will it go higher? I do not believe so. I really do not. And here's why. It's not the weekly time frame, the daily time frame. Although the setup trend, that usually is a level to watch, and in fact we did hit that today. The thing that I'm really watching is the weekly chart. And we're on that 9 right here on the weekly chart. And we do have this here trend line coming in that I think we're going to fail at, coming back in here from 2017. So this is a pretty old one. I don't think we're going to stay below there too long, though, just due to the fact that the dollar continues to get weaker. I think silver is going to go with gold to the upside due strictly to dollar weakness. Bitcoin looks like they're trying to hold Bitcoin here. Not a lot of buy side volume relative to sell side, so and we were getting pretty far from the ADMA here, so a little retest before another hobble back down. I'm okay with that. Still pretty confident in the bearish Bitcoin play. Natural gas lower 9, probably nothing to see there. Soybeans, I think, will be benefited from this weak dollar. I don't think that's generally how all commodities react when the dollar is weak. We are in an 8 here, which I don't particularly care to see. However, the weak dollar, I think, could help us breach 928. I need to reiterate that. Corn, yeah, that's a breakout in corn. I'd probably take that trade. I'm not going to, but if I was to trade corn, I would probably take that. Yeah, beautiful. You have this little thing here keeping it down. Wheat. Yeah, no, nothing. VIX, obviously, negative correlation to the S&P. I'm still going to be watching this heavily, though, as we continue to go up. Get some levels marked down here. 2086 at the top. 1731 at the bottom. S&P did break out. VIX did not break down. So we're going to keep watching. This level here, $17, and this line's at 1731 on the VIX. It tends to stay at this 200-day moving average. Mind you, the VIX, it does not behave like a stock. It's an index. So it moves a little bit differently, but it's still important to keep an eye on what that thing's doing. That can really give you some guidance. I did not update my positions here. That's gone. Anything having to do with short market's gone. So basically, I took all those off and I put some new things on. So I need to update this as we speak here. Live, you get to trading views being a little funky on the phone. So you might have to close that. So we'll see. We'll try Tastyworks here. Apologize. TradingView just continues to give me more problems day after day. Okay. KDP, Keurig Dr. Pepper. So why am I a buyer here? This one is actually an earnings related trade. So basically what happens to the options, and I've talked about this before, but why you do not want to buy options into the actual earnings announcement. It's called IV Crush. The price move from the earnings, so say XYZ stock, is at $100. The earnings are coming out, January 1st, and it's December 20th. Whatever, doesn't matter. So, the price, market makers have an expectation as to where the stock is going to move either up or down going into earnings. So, let's say they give it a $5 expected move. So, earnings, good or bad, doesn't matter. They expect the stock to move $5 going into earnings. So, as soon as that announcement's made, that stock should either go up to 105, so up $5, or down to 95, or down $5. Typically, that's how it works. And most of the time, they're right. Okay, these are the people that make these markets run at the end of the day, these market makers, and they're usually right. They have all this information, they compile it, and essentially by giving you expected move, they're giving you free information. Now, why do we buy options if they're getting hammered into earnings? Well, so why do we sell options the day earnings is announced? Say after the market. Well, that price movement, say that $5 expected move gets priced into the options. Okay, implied volatility goes up. It's the same thing that I was talking about with Apple yesterday, where all the bad news was getting priced into the stock. Everybody was selling it off. Okay, because of forward guidance, because they assume that iPhone sales are going to be bad. Same thing happens with the options. They start pricing the expected move from the earnings into the price of the option, so that after earnings, all that comes back out. Okay, option prices go back down to normal. So, and I just did one in Microsoft today. An Iron Condor. I don't usually do it. I'm just kind of experimenting a little bit, doing some earnings type trades. So you go wide, you go way out from the stock price. You pick strikes that are outside the expected move. So that $100 stock with the $5 expected move, you would sell the, say, $94 puts and 106 calls, and if it stays inside of there, then when the IV gets hammered, you get to keep that difference. That's how it works, and that's how you can make fast overnight profits as a premium seller. Well, the inverse occurs prior to earnings. You can go out about a week and a half, 2 weeks before earnings, and that's what I'm doing with all the positions that I'll be talking about here. Okay, we see that we have earnings out here on Keurig Dr. Pepper. Okay, so we're a little bit further out, and I don't believe that is right. It's not the 28th. That's way too. That's not right. Okay, so basically we're finding stocks. Still using technical setups here. You want to find something that's going up based on a technical setup. Okay, with the hammer here, bringing it back above the 850 moving average mass consolidation here. And we're gonna see here. I don't care quite as much about the squeeze during this time frame when we're doing earnings stuff like this. Yeah, no squeeze. So basically this would be a setup that I would want to take here from a technical basis. We're supporting right here back from this level. And I'm expecting more upside here as well. There's no sequential setup. We just got the price flip. Volume is coming up. It's a little bit higher today than the prior 3 days, which is a pretty good sign as well. And the overall trend here is up. We're just consolidating after a little move here. At the bottom, 24.5 up to 27. Okay. So I'm going to win two ways here. I'm liking the technical setup. Is it the best technical setup? Probably not. As you can tell by the way that I'm describing it to you. Okay, so what happens, right? These out of the money options, and that's what I buy when I do this. And they can be shorter. They can be the week of earnings, doesn't matter. Actually, the shorter ones are better for doing this. Ones maybe for the week after earnings or the couple days after earnings. So if this thing stays sideways, I'll make money because the IV's coming up. So those out of the money options, 10 delta, 20 delta, 30 deltas, those things will start to come up. Now, the stock price starts to come out of here. Not only will we get the IV rise, but we will get the intrinsic value, which, typically for trading directionally, that's what we're looking for. Intrinsic value, we want to be buying calls on something that's going up, buying puts on something that's going down. So basically, we're getting a double whammy here inside earnings season. And this will also keep you afloat. Even if you're wrong in this trade, the risk is a little bit lower due to the rising IV. So it kind of helps to offset losses if you're wrong, and helps to fight theta, which is another great thing I like as well. Okay, so we got Keurig Dr. Pepper. Microsoft announced them today. PSX. Phillips 66. Now, I like this. Okay, there's a handful of reasons that I like Phillips 66, and here's why. Okay, earnings strategy is in play here. Next week, I believe, next Friday, on a Wednesday, I'd be looking for earnings on, Friday after, week and a half, so we can get some intrinsic value. Totally correlated to the stock market. I mean, it's made pretty much the exact kind of move that the broader market has made. 2 going above 1, which of course, I love sequential setups. We haven't really gotten below the ADMA too much here. We're kind of rounding out. You almost got like a hook pattern here, which I love these huge type shapes here. Usually acts as a launching pad, so it comes out of here, bang, almost every time you see something like that, you get some insanity. This is oil and gas, so this is correlated to crude oil, which is also breaking out today. So this beautiful setup here, and when I talk about, getting, good setups and running with them, yeah, this is one right here. Exactly what you want to see. And I took a little bit of risk here on this one, on CLF, which is a pretty big gainer today. We're going to find out why. I would imagine it's some kind of a news event. This is up almost 20% today. Okay, and you're thinking, you know what? Why would you buy something that's up that much? Earnings here on a 4, breaking a setup trend line, which to me is that probably means more than just about anything. Breaking a setup trend line, as well as the 200-day moving average. Yeah, we were up quite a bit today, but also look at the volume. Alright, if you see a volume spike like that, excuse me, when you see a volume spike like that, something is going down. Going into earnings, I would imagine that they're probably pricing in earnings from here. We've had quite a bit of a run since dividends. It appears this is rising with the broader market. But that volume right there, in conjunction with breaking two major levels, in conjunction with earnings coming up, is a recipe for me to put a position. Now this position isn't as big as Phillips 66. Okay, the setup wasn't as good. Say I put $300-400 on here and 100 on here and maybe 200 on here. I believe that's. Let's see. Yeah, so we're gonna be putting on a couple more tomorrow. Probably selling some puts. Yeah, where's my target for this? Once we got a little bit more time for earnings, I can afford to get a bit longer target. I like the setup trend line. I think that's a reasonable target. 10% in a week and a half going into earnings. I think that's totally tangible. We just have to get above the 27 handle, which we could totally do. We've got enough time to calm down. Microsoft. Let's see how that Iron Condor performed today. Excuse me here, Microsoft. Earnings is really a fantastic time to trade, and I really haven't been doing as much as I would have liked to doing earnings things. There's always earnings somewhere. They're always putting earnings out, so it's not like there's a lack of them. I think I'm going to start doing more earnings trades from here on out. And here I'm going to post for you my Microsoft position. Which it looks like we're beautifully inside my range. Okay, so we're short the 101. 101 puts. And we're short the 111 calls. Okay, so as long as we stay in here by tomorrow, which it looks like we're going to, both these, especially these, are going to get hammered. Farther out of the money, the harder they get hammered after earnings. These are February 15s, so I don't have much time left in them. So really, the value of these things is going to get wrecked. February 15th. Bang. And maybe I'll even keep the position on for a little while. So we'll see what this looks like. But yeah, as I said, I don't really do a whole lot of trades like this. So this really was an experimental run, and I'll make sure that I update as to the results of this. Because the more information I can get out there, the better. So those are really my only positions right now. I just don't have a desire to put on really a large amount of positions. I have no desire to do so. At least until I get back into a groove. If we start going into a bull market again, we pull back, we create that higher low, then yes, likely I will probably get back into some of the FANG, like Apple, most likely. Probably will be my target number one. Maybe Facebook, maybe Twitter. I think while we're live here, I'm gonna go in and start clearing some stocks out. Microsoft, don't care about you. Procter and Gamble, yeah, we'll keep you. X, don't care about you. Apple, we're gonna keep you. Johnson and Johnson, put credit spreads tomorrow. That's what I was gonna short. Short some puts in there. Applied Materials, yeah, we're gonna keep you definitely. Verizon, I never trade you. PCG. Yeah, by the way, Pacific Gas and Electric supposedly found bankruptcy financing. Still waiting for a short in them. I know I was talking about picking up call options there at $6, and that thing was way down there. More than doubled since then. I never took the trade. It's more risk than I really prefer to take on. Alcoa, we're going to keep on. That's breaking the 50 right now. And they're in aluminum. So I would imagine that aluminum probably is affected similarly to the rest of the metals. As the dollar gets weaker, aluminum prices go up. And that's something I've been considering. Bed Bath and Beyond, I have no desire to even do anything with. Lennard, Morgan Stanley. Yeah, Aurora Cannabis. We're back above the 200. Still not really a buy. I think with this stock, I'm going to be a little bit more conservative, and the returns should still be, relatively nice. Chesapeake does have options. They must have had good earnings. Of course, they don't post them. I'm looking the setup here in Chesapeake. I probably wouldn't buy it yet because we're awfully close to resistance, but we'll keep you. We don't need any more of that. Yeah, I don't even know why I have that. Here, Micron. Coming up close to resistance. I don't ever trade that. AT&T, 2 below 1 on bad earnings. See if the trading view will give me the information about their earnings. Yeah, didn't say anything. Don't trade that. Wells Fargo, holding the ADMA, but I don't care for you. Square. Yeah, Square just pulled back to the 200. I'm going to be keeping an eye on that. Qualcomm. Still getting butchered. Yeah, we'll keep you on there. Another drop in revenue amid licensing disputes. Keep an eye on you. Intel. Bad earnings. Nah, I'm not playing Intel. PBR. Oh, that's breaking out. 2 above a 1 coming out of consolidation. Tell me that doesn't have a squeeze. PBR. Let's find out. No squeeze. I like that setup though. We'll keep an eye on you. Energy Transfer. Yeah, they're breaking out of their range. Flagging pattern. Yeah, what do you know? Another. Oh, that's right. CVS. Range bound. I don't really care for that. Yeah, I'll be damned. RWOK. This one's penny stocks. That doesn't really need to be on here, but I'm going to keep it. New Age Beverage. Kind of a dud. We did have some volume coming in today. That's a good sign.